Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of Harbor Access Investor Relations, we're very pleased you have joined us for our next live presentation from Lithium Ionic Corp. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Blake Highlands, Chief Executive Officer of Lithium Ionic Corp., which trades on the OTCQX Best Market under the symbol LTHCF, and on the TSXV under the symbol LTH. Welcome, Blake.
Oh, thank you very much, and welcome everybody. As mentioned, I'm Blake Highlands, the CEO of a company, Lithium Ionic. We're a Brazilian-based asset, hard rock, lithium, spodumene focused. As I flick through here, I'll like to highlight a few things before I get going. But being Brazilian, there's questions about tier one jurisdiction versus places like Canada, the U.S., Europe. We are in one of the friendliest mining jurisdictions in the world in Minas Gerais state, well known for over 100 years of mining history and ultimately clear path for permitting, moving projects forward, great technical background and labor force, ideal for getting projects like this up and running as quickly as possible. And as I'll outline, that really is a big focus for our company. We are in one of the most important advancing lithium districts in the world. It is being coined the Lithium Valley, previously the East Brazilian Pegmatite Belt. Ultimately, some of the highest grade, coarsest grain spodumene in the world, analogous only really to Western Australia, where all of the world's current hard rock lithium is produced. We just recently put out a couple studies. We've done 2 resource updates this year and continue to grow. We have a PEA that just came out last month outlining a robust project of $1.6 billion post-tax NPV and 121% post-tax IRR with a 20-year mine life behind that. Very low cost of capital to build, low cost of capital to operate, and I'll certainly touch on some of those things as we go through here as well. I like to point out our Brazilian team. I'm Canadian by background. We trade in Canada, but ultimately we are a Brazilian entity. We have our office in Belo, which is very close to the mine site, and our team is really a Brazilian team, and we're very proud of that, and we think it's a huge competitive advantage for us. And as I mentioned before, the rapid development opportunity here, focused on Minas Gerais and how quickly these projects can be developed, and of course, based on the strength of our technical team, is helping us kind of pave the way and separate ourselves from our peer group in getting into this cycle now and catching the lithium wave. Just really quickly, a little over 130 million shares outstanding, trading at about $1.50 Canadian right now, market cap over 200 million, and we have about just under $20 million in cash in the bank right now. Roughly 25% insiders and management holdings, probably about 30% institutional, and the rest free float. I won't spend too much time on this. Introduce myself. I'm a geologist by background. Worked in precious metals previously, but what I like to do on this is focus on Helio Diniz, Carlos Costa, and the technical team that is driving things forward on the ground. They have over 40 years of experience in Brazil. Helio has been behind permitting 5 different projects in the country, including in difficult areas such as the Amazon, where there are significant First Nations issues. The last project that he permitted actually had 35 different indigenous groups that he had to work with to get the permit process through. So very, very happy to work with someone with his background and experience, and he has a long history with Carlos Costa, our VP of Exploration as well, and that is ultimately why we've been able to pick up the ground we've been able to pick up, why we are able to explore so efficiently, and why this project continues to get bigger and bigger. I talked a little bit about Minas Gerais state. Minas Gerais in Portuguese means general mining, so hard to find a state or location that's more mining friendly. I would stack it up almost any other jurisdiction in the world, tier one, focused on moving projects forward. We are in the heart of that, and we are right next door to 2 producing mines, lithium mines. One, a 30-year producer, smaller scale, CBL, privately owned, and the other one, maybe more well-known, is Sigma Lithium, which just came online this year and actually showed some of their initial earnings this week. So very, very exciting. We're located right beside a town of over 40,000 people in SMID, hydroelectric power right to site. And by that, we've actually also acquired power and actually locked up the hookups for hydroelectric power, which is a key component to getting projects built. And that will be up and running in 2025, in line with when we're starting our production on the project. Access directly to port, paved roads, really an airport in Airway that you couldn't ask for better infrastructure. I talked a little bit about the East Brazilian pegmatite belt now being coined the Lithium Valley by Anna Cabral, who runs Sigma, but also by the state and their focus on bringing this area to light. This is a part of Brazil that has not seen the prosperity that can come from industry, and so they are very, very focused on bringing this economic opportunity to the area. But ultimately, what makes it stand out, I mentioned earlier, it's a world-class jurisdiction for hard rock lithium. It's a pegmatite belt. Pegmatites really are just large crystal granites, if you think of it that way, which you'd see in your countertops. And so some of those large crystals are beautiful and unique, and they actually produce, this belt actually produces almost 90% of the world's semi-precious gemstones and dimension stones. So one of the large well-formed crystals that we happen to have in this belt is spodumene. And as many of you know, spodumene is really evolving as one of the, if not the most important mineral related to lithium in the world. It's the fastest to be discovered, defined, and exploited. It can then be processed directly to a hydroxide or carbonate, which is, of course, what all the new batteries are looking for in this EV movement. And key component to this is that they can be processed at low cost. And so ultimately, they are more resistant to fluctuations in lithium pricing. And we are seeing those in the market, of course. So projects like this, again, very low operational costs, very high margin, small footprint, easily permittable, and easily operatable. Two key areas here, the Itinga area and the Salinas area, which I'll focus on. Itinga is where our Bandera asset is, and that's where the PEA has been focused on and our resources have been focused on for now. But Salinas is another area that we have, another key basin in this belt that is an evolving resource we were hoping to put out early next year. So I'll talk a little bit about the mineral resource. This is a resource focused just singularly on Bandera. You can see it on your screen, a smaller claim package right in the center of our land holdings. The light gray are our land holdings. Bandera is a 30 million ton indicated and inferred project right now and growing. I can tell you it's already bigger than that today, and we hope to have an update on that in the new year as part of an updated feasibility study that we expect to put out in Q1 of next year. Additionally, we have another project in the Galvani area called Utralato. It's about 3 million tons right now as well. And so, there's roughly 33 million tons that you're staring at on our properties on this page. And I point out on this page, we also see Sigma's land holdings. You can probably see Shusha on there, and they have a couple other deposits, NDC, Barrero, etc. And really on this screen, you're looking at roughly 130 to 150 million tons of material running at about 1.4%, which is very, very high grade, all spodumene, very low in other content. So really world-class, unbelievable belt, continues to grow all the time, and very, very exciting. Just highlighting some of what I talked about in the PA, I'm just going to reiterate. We put out this PA. It's a snapshot in time. Really, we're calling it phase one. What we wanted to do was show, okay, take that resource we had for 30 million tons of Bandera, and let's put some economics around it and show it to the market. Well, looking at this project, standalone, moment in time, 1.6 billion US post-tax NPV. That's 2.2 billion dollars Canadian for a 250 million dollar Canadian company. So there's a huge value gap to close there. 121% post-tax IRR, 20-year mine life, producing over 200,000 tons per annum of high-grade concentrate, over 5.5% concentrate grade, which is world-class, and a payback period of 14 months using a heavily discounted spodumene price of $18.50 from current market. So all-in cost, probably somewhere between $500 and $600 a ton. I can address that later as well. But basically, when you look at it that way, spodumene trading now somewhere around $2,000 a ton. These are very high margin projects, which is why they pay back so quickly and why some of the economics are so strong. It's just a look at the mine plan, the layout. You can see it's an underground project. So just to the north of us, CBL, It's been producing for 30 years, also an underground project. So we have proof of concept right there to the north. We also know what kind of recoveries to expect, what we're going to see on the throughput. We know that from CBL and, of course, Sigma coming online now as well. Expecting to do just over a million tons run of mine, 1.3 million tons run of mine per annum, and again, producing about 200,000 tons of concentrate per annum. Basically, all our costs are benchmarked off of operations in the area. And again, we have a blueprint for how all these things work because we just saw Sigma be built right next door. So really, really confident in our numbers given that we just saw these projects come online. Won't spend too much time looking at underground development and production timeline, but you can see, we're really bullish on what we're going to see on the mining here, and you can see that we've got some pretty detailed underground mining development plans ready to go. Again, this deposit continues to expand. We see it down dip. We find new zones. They're stacked lenses essentially, and so they're continuous, homogeneous with nice widths. So they're kind of ideal for these underground projects. It's the value gap to close. If you know Sigma, you know that they went from a $150 million company to a $4 billion company in about a year in a running lithium market. But of course, they're still roughly a $4 billion Canadian company. And so what are they? They're a phased approach hard rock lithium company in the same belt as us with a project right next door. We saw their location. Their phase one was going to be 250,000 ton producer. We're looking at being just over roughly 220,000 tons of phase one. Then they're looking to add phase 2 and 3, which also gets them up to 600,000 tons, and they hope to get over 700,000 tons of operation. So what are we? We're looking at outlining that first phase now, getting that into production, then bringing on more resources, showing our next phase 2 and our next phase 3, which we continue to do through strong drill results. And so we're basically following in Sigma's footsteps, just maybe a year behind what they're doing. All that being said, the value gap to close is between $250 million Canadian and $4.5 billion Canadian. So that's the upside. That's the torque in the name, and we can point to somebody right next door. I can stand on our asset and see their mill from our project. So it's not hard to imagine where we can get to. A little bit about them again. They were $160 million to build their project. We're looking at a $230 million build cost. So very, very similar. You can see the economics on projects like this, the growth potential. You can see on the bottom the chart and how they've traded over the last 5 years. Again, the torque in our name and where we think we can go from here. Very low cost to get into production, very quick payback, and very quick permitting and build time. So really the ideal part of the world to be working. Just highlighting some of our drill results and some of our grades. Key areas: Bandera, Salina, Sanchira. I'll look at some of those now as we go forward. This is focusing on Bandera, showing you CBL, that 30-year producer to the northwest. They're doing 36,000 tons of concentrate. They'd like to grow that to 100,000 tons of concentrate per annum. So again, if you look at us, 220, them at 100, Sigma next door at 250, and growing. Ultimately, this is becoming just this small footprint here without even expanded drilling or more exploration or phase 2 or 3 from us. This would be, becoming one of the largest hard rock producing belts in the entire world. And again, with some of the highest grade and highest quality content in the world as well. So look at where CBL is to us. I used to show this slide just to prove we were actually drilling on the ground, but now I like to use this one to show the things that slow down permitting in Brazil are deforestation and First Nations generally. We don't have First Nations consultation to do here. It's not part of this land area. There's no high yield farming. There's no major industry to move. There's no community to move. And there's no major forest deforestation to do, keeping in mind that that's really focused around the Amazon. So what you're seeing here is flat-lying areas, scrub brush, kind of the ideal outlay for mining. It's a little quick look at Utralado, and I mentioned it earlier. It's a 3 million ton showing that we're looking at potentially exploiting from an underground scenario as well. It would be an additional 50,000 tons of concentrate production if we move forward with that, and it would be additional to that 220,000 tons of concentrate. So again, very, very meaningful, especially in this high margin, low cost to develop kind of environment. and we're continuing to explore the showing at Galvani and hopefully continue to grow Trelato. Soil samples are one of the best ways to explore the areas. There isn't a lot of outcrop. So what we've been able to do is use soil geochemistry, and in that, been able to show very high grade anomalies that we need to follow up with drilling. And we expect, as we've shifted a lot of our drilling to close up on feasibility type drilling, geotechnical stuff, hydrogeo, we're going to move into exploration drilling again. We expect to see a lot of additional discoveries coming in the next few months here. Salinas, to touch on this quickly, next door to our Salinas property is a company called Latin Resources. They have a deposit called Colina. Colina is over 45 million tons and growing. I think they're going to have a resource out again in the next 2 months that'll show maybe even doubling that kind of number. I don't know, but certainly a huge scale project right next door to us. And we're right on that Colina trend. And as I kind of zoom in on it, that this is the northeast extension of Colina that we're drilling now. And we expect to develop a pretty significant resource here over the coming months, and in the new year, we're hoping to eclipse over 10 million tons in this area. So, a strategically important area, of course, because of a large deposit developing next door, and also as the exploration comes in, it's developing into a particularly interesting economic area. How do you get to phase 2, phase 3 of production? You can add maybe 100,000 or 200,000 tons of production from somewhere like this. Now our scenario goes from 220 to 400. And we start to look at world-class size projects. Just touch on this quickly. We have an MOU with the state of Minas Gerais and the development arm of Minas Gerais. They approached us about moving projects in this area forward as quickly as possible. And so we've signed with them inside the state to basically allow us to work with them to make sure that our filings are top of pile all the time. So when we go to submit our permits for construction, which we are doing this month, they will make sure that all of those files are going to the top of the pile on the desk of forms to fill out. They will work hard inside the state to actually move our project forward towards production as quickly as possible. And this is another reason why we think by summer of next year we can have our construction license to start building this project. So submit this month for a construction license, have that feasibility done in early next year, get to a place where we're permitted by summer and starting to build the project to be in production into 2025. Again, just pace to market so important. I already talked about a lot of this and the timeline Gantt chart here for us. So we're very excited about some of the upcoming things. We've got our PA done, permit submissions, feasibility study coming, and obviously we're going to start looking at how we're going to finance that project as we move forward here. ESG is so important. We have an internal team looking at how we operate with best practices, and we are currently working with Onion and Irma to make sure that we have third-party review of all of our operations. This is it. Basically, what this is a developing project moving into licensing as quickly as possible. Formed as a company in May of last year and already in the process of getting a feasibility and construction license in place, looking to go out and get construction financing sorted out and ultimately be in place to de-risk the build of this project by summer of next year. I don't think we could move any faster if we wanted to. But again, as we move those things forward and move towards production and try to close that value gap, we'll also continue to make new discoveries. We'll continue to grow our resources and build this towards the world-class scale that the opportunity in front of us has. And that's sort of it from the presentation perspective. What I'll do now is I see there's some Q&A that's moved in here, and maybe I can pick through some of these questions and do my best to answer here. It says, given your quick timelines to production, what are your financing options that are available to you? So there are a few. The keys that we're focusing on right now is considering a prepay opportunity for offtake on this material. There's extremely high demand for high-grade spodumene going forward. So what we have done actually for the last 6 months or so is we've been in a process with BMO, and they have, of course, been doing an excellent job at narrowing in strategic partners for us to ultimately look at offtake opportunities for our material, um, to ideally secure prepay and a prepayment on the construction of the project would allow us to essentially de-risk basically all the financing on it. And as we move that forward, I think that will take care of most of, if not all of, the financing costs in a non-dilutive way. Ideally, not having us actually have to go back to market and access more capital from an equity issuing standpoint. And so we're very keen to close on deals like that. And so they help us look at automotive company opportunities, trading houses, strategic corporate partners, a long list of NDAs and due diligence are underway. And ultimately, we're looking to nail down the right partner for us and for our shareholders. So we're very, very confident that in the next few months, as we move towards getting our construction license, that we'll be able to secure the financing for this project going forward. Are you seeing outside interest from non-traditional groups? I asked based on Exxon's recent transaction, and I'm curious if the market can expect more of those types of deals. Well, I think that what we saw certainly in the last 12 to 18 months was a white-hot lithium market. There were a lot of deals being done with automotive groups that were certainly focused around offtake, some of them with capital, some of them just a simple offtake. And they were received quite well by the market. But ultimately, I think actually with pricing pulling back, what we've seen is maybe a more stable market. And so while I haven't had many conversations with the likes of an Exxon and some of the the gas companies that I believe are starting to jump into the space, what we are seeing is trading houses coming back in, mining companies starting to recognize the opportunity, and because of probably a more stable price point, they're able to look at entering the space, have a longer term outlook, and more realistic margin for who they're going to supply that material to. So I don't know if that's non-traditional. It might be actually more traditional for the mining space, but certainly for this lithium boom, we're seeing all new names kind of come into the space. I think we're going to see more and more deals done with the trading houses and corporates. I mean, we just saw Glencore take some offtake material from Sigma Lithium last month. So I think we'll see more and more of those, and we'll continue to see the automotive deals, but there will be a mix of new names coming into the space. Who do you foresee as the ultimate end buyer of your product? It's a great question. I ultimately don't know the final end buyer that we're going to end up working with. I mean, we've had a strategy and a thought process that if we could feed a North American market that's trying to make a transition in the EV space, that would be extremely interesting to us. That this story would continue to evolve into a North America supply chain story, as opposed to an exploration drilling story, mining story. But as we move things forward, we're open and listening to all opportunities, and ultimately, the end product, the end user, or who's going to take that, maybe a battery maker, maybe an automotive company. We'll just have to see how that plays out over the coming months. Two-part question. Lithium prices have been weak. Okay. Does your project still make money at today's prices? And what is your ultimate break-even price? So it's a really good question. I think that it's important to address in this market. While we've seen lithium pricing pull back from $80,000, $90,000 to maybe $20,000 in the space, it's still a 10 times multiple from where it has historically traded in average pricing. So take spodumene as an example, which is the product we would be selling currently about $2,000 a ton on the market. We're going to be producing that for an all-in cost of between $500 and $600 a ton. So there's still huge margins here. The projects that ultimately will potentially struggle in the pullbacks in pricing, and we may still see some pricing pullback in the coming months before we see recovery again, are likely some of the higher cost producers that need chemical flotation, lepidolite projects, maybe some of these DLE projects and stuff. They're higher cost. Even projects that are spodumene and DMS, but they're maybe in higher operating cost jurisdictions, parts of northern Canada, in the U.S., etc. Even in Western Australia, some of the higher costs, from energy costs and labor costs, may see an issue on some of their margins, maybe. But when we look at it, I mean, this is a key advantage for us. It's a low cost of capital to build the project, and very low operating costs. So ultimately, anything over about $600 a ton, and we're still operating and in decent shape. That seems to be it for what I have for questions. Thank you so much for the time, and I hope everybody has a great day.